you're watching us on Moneycontrol. I'm Ridhima Bhatnagar. In Ideas for Profit, we want to talk about Maruti Suzuki today. Should investors wait for corrections? We will analyze Maruti Suzuki, one of India's most well-known companies. Now, the Maruti stock has recovered quite a lot from its March 2020 lows, making valuations very expensive. Despite double-digit volume and revenue growth on a year-on-year basis, the benefit of operating leverage could not get percolated down to the operating margin due to adverse product mix and rise in raw material prices. Now, Maruti's stock price has risen 91% from its 52-week low, which it touched in March. If you look at the valuations, however, they are not looking expensive at 33.1 times FY22 projected earnings. If you look at the financial performance, then you've got the net profit, which has increased by 24.1%, while the revenues have grown by 13.3% if you compare this on a year-on-year basis. Now, Maruti's volume grew by 13.4% year-on-year on the back of a tilt in consumer preference towards personal vehicles and the pent-up demand as well. But realizations remained muted despite the offering lower discounts, rupees 20,180 per car compared to rupees 33,000 per car in Q3 of FY20 on passenger vehicles. Now, poor product mix tilted towards entry-level cars led to no growth in realization. While the EBITDA grew by 5.9% on the back of tight cost control measures, the EBITDA margin contracted by 66.2 basis points from a period ago. If you look at the outlook for the future, at present, according to the management, the inventory level is very low and the company has an order backlog of 216,000 vehicles, indicating that the continued demand momentum. The preference for personal mobility would continue to aid demand. The company is likely to be one of the major beneficiaries of this trend, as it is the market leader with a huge network and is well placed to garner a bulk of the increased demand. Additionally, with the group crop production and normal monsoon, the management also expects a positive sentiment across rural areas, which is expected to augur well for Maruti, which has a strong presence in rural areas as well. Now, apart from a rise in demand, the company has a slew of new offerings which is expected to aid growth as well. It has planned multiple launches over the next few years. According to the management, the newly introduced Espresso received good response. Maruti has also launched a refreshed version of its Vitara Brezza, as well as Jimmy, which is a compact SUV which has been launched for the export market. That is under evaluation for being introduced in the domestic market as well. But there are challenges. Now, the adverse product mix, higher commodity prices, especially those of precious metals, which have impacted gross margin on a year-on-year basis. The rise in raw material prices is expected to hurt margins in the future. Higher commodity prices, especially for palladium as well as rhodium, will impact the margins. Additionally, with steel prices now moving higher, Maruti expects gross margins to remain under pressure going forward as well.